Good morning, everyone. Welcome to the 2025 Annual Meetings Governor Talk. I'm Krishna Srinivasan, Head of the Asia Pacific Department of the IMF. Today, I have the distinct pleasure of speaking with the Governor of the Reserve Bank of India, Sanjay Malhotra. Governor, thank you so much for doing this. I know you have a very busy schedule. Governor, I'm going to start off with a big picture question. We are living at a time when this uncertainty is very high. The global landscape, financial and economic landscape, is changing owing to tariffs, commodity price volatility, and so on. In this context, how challenging has it been for emerging markets like India to manage inflation while supporting growth?
Thank you very much. It's indeed an honor and a pleasure to be here in the middle of this August gathering. So thank you very much, all of you, for coming here in large numbers. Well, yes, of course, certainly, we are living in times of unprecedented uncertainty, high geopolitical tensions, uncertainties on account of various reasons, policy uncertainty, and at the same time, very high debt levels, government debt levels, of advanced economies, especially very high. Now, this has implications, of course, for growth, for global growth, and therefore, naturally for global demand and the growth of the emerging market economies. And at the same time, it spillovers, possibly, potentially, and so that's a risk that all emerging market economies today need to take into account on capital outflows, because these fragilities that we are witnessing have immense, potential on that account. Inflation, on the other hand, has been still elevated. Of course, it's down from the peaks that we saw in 2022. The positive thing is that commodity prices, mostly all of you are aware, including oil, are quite subdued. With the exception of course, gold and silver because of their safe haven potential. So these, of course, these again have implications for the emerging market economies. And India, on the other hand, you would have all noticed, we have bounced back, after the COVID and the implications of Ukraine-Russian supply chain implications of the Ukraine-Russian war. We have bounced back. We have been able to manage our inflation very well, from almost about 8% inflations now.
It's below target now.
It's below target now. We are at a 8-year low of 1.5%, last number that came in. And so since February now, we have been supporting growth. We have now, of course, we did a lot of tightening. We had increased our policy repo rate to 6.5%. And the role over there, of a coordinated role with the fiscal authorities, because in India, you see about 46% of our basket, the CPI basket, is food.
Right.
Where demand, more than demand, the supply side pressures are more. And so it becomes very important for us, for the fiscal authorities to intervene. So government has, institutionalized a mechanism over there at the ministerial level to look into these aspects and identify the pressures, the price pressures, and take proactively action on the supply side, while the monetary policy, monetary authorities, they take action, on the monetary policy. So that helped us reduce inflation to within the target band. Growth again, has been phenomenal. We are the largest, highest growing, amongst the major economies.
Yeah, we have growth at 6.6% for this year.
6.8% is our projection, and on an average, last 4 years, we have got an 8+% growth rate. The first quarter was 7.8%. So I would say, a coordinated effort with the fiscal authorities, identifying, what the pressure points are both on the demand side and supply side, and this coordinated action really helped us. What has also helped is the fiscal rectitude which the central government and the state governments have observed. Fiscal deficit now is at a very manageable level, brought it down. It's projected now, budgeted to be down, to 4.4% of GDP for the central government, and it's the total debt of the governments, both state and central, together is amongst the lowest amongst the the last large 10 economies. I think it's only Germany which has lower public debt levels. So fiscal consolidation and good coordination between monetary and fiscal policy, that has helped us.
Well, that's a key takeaway for us. So in the context of uncertainty, greater coordination between fiscal authorities and the central bank has helped lower inflation. Now, one issue also in this context, Governor, has been that emerging market currencies have been quite volatile against the US dollar. What's been India's experience with the rupee and, in the context of the broader EM landscape, and how have you managed in exchange rate volatility?
See, ultimately, I think, it's the macroeconomic fundamentals of any country, which are going to determine what the level, the price, the band of the economy is. Well, yes, you see, from the peak, dollar has depreciated, by about 10% this year, and now it is, moving range bound. The Indian rupee has, on the other hand, it's not appreciated as much vis-a-vis, the dollar, whereas most of the other currencies this year, post Liberation Day, they have appreciated. Now, this is on account of one, we have higher tariffs. That's 50%, is the largest tariffs that we have. And on the other hand, there have been, capital outflows as well. This is also to be seen in the context of the outperformance of both the Indian rupee and the Indian equities prior to Liberation Day, say since till 2024. The Indian equities and the Indian rupee actually outperformed others. So in a way, in some sense, it's also a correction. But insofar as volatility is concerned, without going into levels, we in the Reserve Bank, we do not, as I mentioned earlier, we do not, our stated policy is not to target any price level or any price band, and let, the markets actually in India are quite deep, quite wide, and we have a very robust and mature market. So believe in, the markets to decide, what the level should be. We do, our effort really is to ensure that there is an orderly movement of the rupee, both sides, and any undue or any abnormal volatility is curbed. As I mentioned, levels are going to be decided, by the macroeconomic fundamentals, the capital flows, more importantly, the current account flows, and so what it means now with more and more countries, becoming inward-looking, global growth, being kind of subdued, still much below, the pre-pandemic levels. What it means for all of us is that we look structurally as to how we improve our own competitiveness, our productivity, so that we are not only able to expand exports, we are able to diversify exports, and we are able to get some good durable capital inflows. That's what is going to decide how the rupee or the local currency is going to actually behave. Indian macroeconomic fundamentals are very strong.
Pretty strong, yeah.
As those who are following India would be knowing, on the current account we have a deficit of only about 1%. On an average. Last year it was only about 0.6% or so of GDP, and we had a twin balance sheet problem, as some of you would be aware. Both the corporates and the banks, and now in fact both of them are very healthy, they are very healthy. Corporates as well as corporates are flushed with funds, waiting for investment, some of green shoots, we see over there.
You see that will translate into higher private investment. I mean, that's been one kind of weak spot in the Indian economy, right? The private investment hasn't really picked up at a speed at which you would want it to. So
There are good indicators now, going forward. Capacity utilizations are increasing.
okay,
There is better investment sentiment in the businesses. There is still, that uncertainty, as we
Yes,
are all aware,
absolutely.
which is kind of holding back on the animal spirits. And households as well as businesses, they are kind of delaying their investment and expenditures. But there are green shoots, it's sector-wise. So some of the sectors, we are seeing some signs of investments. And so it's, we are all
so
over
you do
here.
see upside risks to growth once if the tariff issue is resolved.
Yes, we have, in our projections actually taken into account the higher tariffs as the baseline.
Right.
But negotiations, are on. Even in, today there is a team over here. So I met the team in the morning over breakfast. They're over here, discussing with the U.S. authorities. See, India is mostly a domestic-driven economy.
Right.
So while we are impacted, by the higher tariffs, it's not a matter of huge concern. 6.8%, of course, much below our aspirational levels of growth, Viksit Bharat 2047. So it does impact, but yes, there will be an upside if we are able to have an early resolution to the tariffs.
Governor, I had one question specific to India. You are reviewing your monetary policy framework as we speak, right?
Yeah.
So what lessons can we learn from India's own experience and the experience of other EMs which have had inflation targeting framework for some time? So what kind of lessons can we learn from that? Or is it too early to talk about that?
No, yeah. So we are amongst the later adopters of inflation targeting. Of course, started in New Zealand. So in 2016, there was an amendment to our act, to the RBI Act, which provided for this framework of flexible inflation targeting. We call it flexible because our target that is given to us by the government, while the framework is decided by the parliament, the target is given by the government. There is an MPC, which has Monetary Policy Committee, which has internal members, 3 of us, including me, from the RBI.
And your target is quite broad.
And the target is 4% plus minus 2%,
yeah.
Which the monetary policy, tries to achieve through the policy repo rate, which it sets, and the RBI, then operationalizes the various tools that it has in its toolkit to manage that inflation. As I mentioned, it has served us well. These 9-10 years that we have now had flexible inflation targeting. It's now subject to more public scrutiny first of all, and so that makes it more credible, more transparent, and provides that legitimacy. We have a very clear communication policy. The governor reads out a statement, a long statement, giving its assessment and a rationale. There is a presser, immediately after that, and the outcomes have been good.
Okay.
Post FIT, inflation has been lower.
Right.
Of course, it's not only monetary policy, as I mentioned even earlier. It's been good coordination with fiscal authorities. But inflation on an average has come down by about 2%, which is not less, 4.9%, which is well within our band from 6.8% pre-FIT. So outcomes have been good. You asked about the lessons. One lesson, of course, as I mentioned earlier, is that economies where supply side also has to be managed, the fiscal coordination is very important. The other important lesson for us has been the flexibility that we have in this framework. So transitory and temporary kind of inflation, we are able to look through post-COVID, especially. The inflation had gone very high, and growth was also, at the same time, not picking up. In COVID, during COVID, we were in all of us were in recession. And so that was, policy rates had been reduced. inflation was very high, but still, the Monetary Policy Committee was able to look through that high inflation of about 6.6%. Our band is still the higher, the upper limit is only 6%. So this flexibility, I think, is very important when one is talking about inflation targeting.
Thank you very much. One question, just changing topics. There's been a rapid expansion of non-bank credit and digital finance in many emerging markets. So the question is, how can countries like India strike the right balance between safeguarding stability while also fostering innovation?
Yeah, NBFCs, all over the world, even in India now, they occupy a very large space. Credit in India, just to give you some figures, credit in India, private credit, as a ratio of the GDP is about 90% or so. 50% is bank credit, 40% is others. Of these others, about 20% is non-banking finance companies, which the RBI regulates. So it's quite comparable now with banking credit. Of course, very, very important because it enters into niche areas where banks are unable to reach. So it's a very important sector for any economy, including India. And of course, at the same time, as you have mentioned, risks because of interconnectedness with banks on the one hand, and the light touch regulation that we have for these NBFCs, which has implications for cybersecurity, for conduct-related issues, for capital adequacy, and so on and so forth. And so what we have is a very multi-pronged approach. We have, first of all, supervision, which is risk-based, both off-site, on-site, a lot of data-driven surveillance that we do off-site, combined with the on-site supervision that we bring in. Regulation is, scale-based. So if there are larger NBFCs, they are subject to tighter regulation. And then for transparency, we have regulations, for the fintechs, which is very soft touch regulation in order to promote innovation. There is a repository which we have for digital lending apps, because this was a concern. So to bring in transparency, we have whitelisted the digital lending apps, which are either managed or operated or owned by the regulated entities. There is a repository of fintechs, which provides us with visibility as to the technologies and the interconnectedness with the banks. So I think this multi-pronged approach has helped us. We have a regulatory sandbox to promote innovation for fintechs. A separate company has been, subsidiary has been formed by the Reserve Bank of India to promote innovation in fintech. As I speak today, I read in the morning, it's today, volumes of loans, which are sanctioned digitally now, they form the huge bulk of lending. While of course, in terms of value, it may not be as high because they cater to, the smaller loan segments, but in terms of volumes, they have taken over. So it's very important for all of us that we try to promote NBFCs and digital lending, while at the same time make sure that they do not have stability concerns for us.
Thank you, Governor. At this time, I'm going to open the floor for questions. Please raise your hand and ask, and keep your questions brief so that we can take more questions. We have exactly 6 minutes left. So any questions? I can see a hand here, half-hearted. Yes. Please. There's a mic coming your way. It's coming from the back.
Good afternoon. Thank you, Governor. Thank you. Question about digital currency. Could you please share with us when India plans to launch its own digital currency supported by Reserve Bank of India? Thank you.
Yeah. So
how do you plan to use it just in internal payments or external as well? Thank you.
Very good question. I'm very happy, that you asked this question. So, in India, we are of the view that stable coins, I mean, CBDC actually, is the answer for cross-border payments. First of all, let me also let you know that for us in India, domestic payments is not an issue. So to that extent, we do not need, a CBDC or a stable coin for local payments. We have a very efficient payment system domestically, and we had a session yesterday where we demonstrated, where we talked about our fast payment systems, which are very cheap, which are very fast, instantaneous, both wholesale as well as retail. So the CBDC really is for cross-border payments, and for that we are already having our pilots, both at the retail and the wholesale level. Retail level so that it can be used as cash, as currency, and at wholesale level to test the settlement amongst the banks. Now, unless other countries also adopt this CBDC, we are not going to see the benefits of CBDC insofar as cross-border payments are concerned. So I would rather urge all those present from the central banks and other jurisdictions that we need to promote the CBDC because this has huge advantages over stable coins. It is fiat. It has all the advantages of stable coin. It can be tokenized, and it can reduce cross-border payments while being fiat, having the advantages of singleness of money, the integrity of money. And so all of us need to promote that. Only then we'll be able to actually roll it out at a large scale.
Thank you, Governor. Question, can I take one from this side, please? Keep your questions brief.
Hi, I'm Soumya. So I just wanted to ask you about Indian governments and central banks' take on cryptos. That reminds me from that question, because in recent times it is increasingly being promoted. So, and there's always a controversy. So, just wanted to take your opinion on it. Thank you.
On cryptos.
Yeah. I'll just quote from what the BIS annual economic report of 2025 says, and I think I kind of alluded to this. What they say is that stable coins, which is one of the better forms of crypto, has huge promise for asset tokenization, but it falls short of the requirements as a mainstay for monetary systems. And so we in India, we believe that it is CBDC and it's not crypto, because it has huge implications for monetary policy, for controls that we have on the capital account. It has implications for money laundering, and so we would rather promote CBDC rather than any other form of crypto, because CBDC has all the advantages as I mentioned earlier.
Yes, question here.
Thank you, Governor. Deepak Ajwani from the Economic Times, India. The world over, central banks across the world are hedging against the dollar. They're parking their reserves and money in gold. Even RBI would be doing the same, but an Indian sentiment, especially around Diwali, everyone's hoarding on the gold. But is this a risk building up in the short to long run? And what is your view on this?
View on the gold?
On the gold, yeah, because if so much of money gets parked into gold, and supposedly there's a crash, because it's already 50% almost in the last 6 months, if that crashes, then what happens to the sentiment as well as the fiscals?
See, for us, we have a very diverse mix of our reserves. So while this appreciation has obviously helped us bolster our reserves, but we are still they are very sufficient. 11 months of sufficient to fund 11 months of our imports, as you are aware, coming from Economic Times. So any depreciation, because the mix is so diverse, I cannot divulge the numbers to you for obvious reasons. It does not have very high implications for us. And I don't think it has implications for households, because mostly it is bought in households. It has great sentimental value, as you are saying. I have not seen households actually kind of selling gold or using it for their needs. So I don't think that there is.
I think the
there is
Indian
any
households
risk.
buy gold irrespective of the price.
Irrespective, yeah.
They keep
So
buying. It's very hard to argue against that. So
They borrow a lot against gold lately, but
yeah, but the gold thing in there.
the value goes down there, their loans go up.
We are out of time. Governor, thank you so much. I know you're very
My
busy.
pleasure. Thank you.
Yeah, thank you
Thank
so
you
much for
very
doing this.
Thank you.